Oh man, so Bitcoin is primed for a relief rally which could take it as high as 29,000, but there is a lot of context which we need to break down here in this video, so make sure you hit up the like button, don't forget to subscribe. Let's get straight into the chart here, because Bitcoin, as you guys know, has been forming this triangle pattern, this symmetrical triangle pattern, which has a bearish, yes I repeat bearish, downside pattern, which I was sharing with you over the last few days. Now, 2/3 of the time, this type of pattern from a technical perspective will break to the downside. The 1/3 of the time, it can indeed break to the upside, and in that case, what we will be forming is a swing low pattern, also a break from the symmetrical triangle pattern, which could take us to one, our price target of 22,000. Then your second price target would be at about 23,000, and then you can go as high as 29,000. But there's a few things we have to look at, because it's not as simple as that. Now, first, let's get over into the hourly candles, which we were monitoring yesterday very, very closely. And I said, when you get a nice breakout from this trend plus a confirmation candle, that would be the technical permission for you to start entering this trade. And I actually entered this trade yesterday. I entered it a little bit eagerly. I was practicing with something on the 5-minute chart, but as I said to all you guys, if you're doing this from a textbook perspective, you want to wait for a break. This would be your candle break, and then you want to wait for the next confirmation candle to open up green. If you had significant volume, then you can enter the trade. And that was the worrying sign last night as we were watching this, close to midnight my time at the time. You were not seeing huge volumes come in. You wanted skyscraper volume coming in to say this is a strong breakout. Now, on the 5-minute chart at the time, and this is where trading can become very, very challenging and why you need to be experienced. If you zoom in, as you can see, this was the 5-minute breakout candle. Now, when you're watching that, you do indeed see good, strong volume, okay? So it can give you that indication. So it was a good breakout, but as you can see since then, just switching back to the hourly, what we've seen since the fact is once we broke out, we then got a retest, okay, which is perfectly normal. Coming back for a retest is okay, but you can see we wicked back into the triangle and then we created a lower high. So this is a little bit concerning right now, because you've got your high there and you've got a lower high. You wanted to see that really go and push beyond it, okay? Now, that doesn't mean it's not possible. You could get this happen and then off it goes, or we could be coming back into the triangle. If we come back into the triangle now, then please remember, you could be heading to the downside with vengeance. And remember, this whole chart pattern has 2 times the probability of falling to the downside, 66 roughly % chance of breaking to the downside here, okay? So if the bulls get rejected at this point and they're unable to turn this into a breakout, you need to have your tight stop loss. You need to be out of this, because this will start heading to the bottom of the wedge here, and then we could be seeing crazy low price targets here on Bitcoin. I mean, let me just zoom out here to the 4-hourly just to remind you of how nasty this can get. Because remember, the long trade, whilst it's possible to take it, and I'm going to show you why you may want to take it, if we fall to the downside, that's 15,000. So you want to make sure that you have your stop losses ready. And the reason the 15,000 is more likely than the 29,000, which is our upside case, is because we're in a bearish stance. If I go back and show you the patterns that Bitcoin's creating, let me do this on the daily chart just to make it a little bit clearer. So what I want to show you here is on Bitcoin, ever since we fell from November 2021 on Bitcoin from those all-time highs, what have we seen? It's been the same pattern time and time again, which I'm going to try to illustrate to you just here, okay? So what happens is Bitcoin falls, big fall. Then it consolidates, big fall, consolidates, big fall, consolidates, big fall again. Brief relief rally, that point. But then what are you seeing again? Big fall, consolidate, and big fall. Now we're in that consolidation period again. This triangle which we're looking at is just that consolidation period. So most likely we have to expect that. But the other thing we need to be aware of is we need to take into account wider consumer sentiment, because wider sentiment right now is just saying, yeah, Bitcoin's heading lower, it's heading to 10,000, it's heading to 5,000. And there's no evidence of that right now. The evidence from this symmetrical triangle pattern can give you price points of 15,000 roughly, and that's the lowest one you'll see from this perspective. Now, you can look at on-chain metrics, which I've also taken a look at, and those can give you different floor pricing models around 14 and 15,000. But for somebody just to say, oh, we're heading to 10,000, what's your data behind that? Where have you got that 10,000 figure from? That's what we need to know. Now, the reason we need to keep looking out for this long trade, even though it's a brief relief rally, is you want to be taking advantage of this. If this move is going to take you from 20,000 to potentially 29,000 and fill this gap all the way up here, that's not something we want to ignore. That's a 50% pump and much more on altcoins, right? If we move here on Bitcoin, you can imagine what percentage moves altcoins are going to do. So that's why I've entered this trade. I've got a tight stop loss. If you guys want to trade this, you can do so using BYBIT or BitGet. Links in the description. Those are the two exchanges I use on a day-to-day basis for trading. They're perfect for that, and you don't want to miss this. But again, the wider scenario is we have to look on our 4-hourly EMA ribbon. We've managed to do an okay job, right? You can see here we've managed to flip bullish on our EMA ribbon. We're above our EMA ribbon here. But if I turn over to the daily, you'll see what I mean, where we're running into resistance. The EMA ribbon is above us, and surely if we were to break out from this triangle and start trying to run towards our first price target, it's very possible at 22. That's not deep into your EMA. The next price target, which is getting towards 23,000, starts getting more into the EMA ribbon, into the middle of it. But if you want to run up to 29,000, you will have to flip your EMA ribbon bullish, which would need a big catalyst. Okay, very, very important. Now, if we take a look at the wider economy, we can see the futures are open up slightly green today, but more importantly, commodity prices are starting to see a slight tick down. We saw oil, WTI crude, fall under $100 per barrel. We've seen a few other things like wheat and lumber start to fall. Now, why is this important? The reason this is important because the global economy and investors are now starting to price in a global slowdown. They're pricing in a recession, which could in turn bring inflation and inflation expectations down. The good news around doing that is the Fed will then feel that the market is doing its job for it, and therefore Jerome Powell could have an excuse to not go so aggressive on his rate hikes for so long. Now, we received the FOMC minutes yesterday. We went through that in my video yesterday. Do go watch that. I also did a detailed breakdown of Voyager. Go watch that. And make sure you hit up the like button on that video as well. But in terms of what Jerome Powell said, he already made it clear in the FOMC meeting we're probably going to see 75 basis points on the next meeting. Okay, so that's towards the end of this month. I think it's the 24th, around the 24th of this month. Remember, we get CPI reading on the 13th of July for the June figure. So that's going to be really important as well. Today, we do receive the ADP net employment figures. Now, this is a private review of the jobs figures, which comes out tomorrow. So this is going to give us an indication, and this can move the market. So be very, very careful with any trade you're playing. Be very, very careful, guys. This can move the market, because this is the labor expectations. And tomorrow, we get the official non-farm payrolls, which is one of the data points that Jerome Powell uses, along with the CPI reading and inflation expectations, when deciding what interest rate hike to apply at his next meeting. Okay, very, very important. We're also seeing the 10-year bond continue to nudge up a little bit today after falling down as low as 2.8 yesterday, which is, I guess, it's better than it was at 3.4. But again, the market is pricing in this global slowdown, and you can now see fears are starting to rotate away from inflation. The narrative is no longer about inflation. The market's like, we've been telling you about inflation for ages, Jerome Powell. We're worried about recession now. Tell us what is going on with the recession. We're worried about a global slowdown. So the only thing which is going to help the markets with this worry is if earnings come out really strong this month from companies, and also if we start to see that inflation comes down. Because if inflation comes down, markets can extrapolate and go, okay, inflation's coming down. Maybe Jerome Powell will pause sooner rather than later, and then we can start to see a rally. But the good news is this is the third day we're now trying to open up in the green here on equities. And if equities can start to get some green and some momentum, seeing the correlation from Bitcoin and equities is treated as a risk on stock, so we would expect Bitcoin to follow suit. One more piece of news we've seen here on CoinDesk was Solana Labs Multicoin accused of violating securities law by a Solana investor. So this is just some news of somebody who's filed a class action lawsuit saying that Solana is being sold and treated as a security, and the cornerstone of the value of Solana securities is the sum of Solana Foundation, and Anatoly, the CEO, and he describes Sol as a highly centralized cryptocurrency that has benefited its insiders to the detriment of retail traders. Very, very interesting. It'd be interesting to see what comes of this, if anything. But again, just more kind of smoke around some of the biggest projects in the space. And, you know, we've seen Solana's had a difficult time recently with downtime. We know they've continued to struggle with the claims of their lack of centralization and how closely in bed they are with huge VC billionaires, and just more news around that. So we'll see how that develops over time. Full transparency, I actually hold some Solana, but it's not something I'm looking to actively actively add to. Fear and greed index sitting at 18, and again, the market's feeling, I'd say, pretty comfortable right now. Like I said, the longer you stay at these kind of suppressed prices, the more markets get used to them, and then people actually go and start buying the dip because they see the bleeding has stopped. But you got to be careful, because what we're setting up for right now, what I need you guys to prepare for, is a huge bout of volatility, and I want to prove it to you. If I head over to Bitcoin, you can see we are heading towards this symmetrical pattern. So either way, we are moving big. We're either going to move big to the downside, which is a technical price target of 15, or we can move big to the upside and get, even work our way towards this EMA ribbon, 25, 26, and even a moonshot up towards 29,000. That's how big it can move. Remember, this type of triangle pattern generally breaks to the downside, but if it does break to the upside, it normally is quite a powerful move to the upside, because it's saying the bears have had enough and they want to reverse with this pattern and start heading to the upside. Another indicator of this, in fact, is if I remove this EMA ribbon, what I do want to bring out is, let's do it on this chart here. Actually, no, that chart's a bit busy. Let's do it on this chart, and let's bring out the Bollinger Bands. Now, the Bollinger Bands are really, really important, but what I want to show you specifically is when the Bollinger Bands tighten, and you can see them tightening here, the upper band, the upper yellow line, and the lower yellow line, as they constrict, as they get closer, that's an indication of a big volatile move coming up. So this is another important indicator for us to look at, say, okay, something's about to happen. Whether it's to the upside or downside, nobody can tell you. Anybody who's claiming to tell you is lying to you, because they're just guessing. But what we can do is prepare. Are we going to break to the upside? Are we going to break to the downside? Let's get our structures in play, get our post-it notes ready with our game plans, and prepare for that accordingly. Also, the other thing I wanted to bring out was the VPVR. If you bring out the VPVR, what you will see, interestingly, is there's a lot of volume playing in at where we are at. Let me just get this arranged for you. Come on, there you go. So what you can see here is there's a lot of volume where we're at now, which is between about 20,000 all the way up to about 21.5, 22. So once we clear this volume, you should see the next section be quite quick to break through. And the reason behind that is, you saw here, we had a bit of volume holding us up around this period, right? This was a consolidation period. And then we just dropped. But the key thing is, when you fall that quickly, you can make that area up just as quick, because there's little resistance in there which formed. Okay, the resistance will come in here, as you can see by the VPVR. It's going to come in at this level here. It won't come in before then. Similarly here, where we've built this area here, this will act like support for us now. So if we run up to the upside and fall back down, we should be able to bounce from this level, because there's a lot of volume being traded around there. So the key battle for us here is to get past this green line, this first pivot point, at about 22,000, and things can start to move quite quickly here for Bitcoin, barring the fact that we do have resistance coming from the longer term EMA. So this is where your resistance will start to come in, is from your EMA ribbon. Okay, hope you guys enjoyed that update. If you appreciate this type of content, then make sure you smash up the like button and subscribe. As always, if you want to trade any of these moves, you can do so using my affiliate links in the description to BYBIT and BitGet. We've got some amazing bonuses lined up just for you guys. Get yourself set up. I personally use those exchanges every single day, and I wouldn't recommend it to you guys if I didn't use it and enjoy those platforms. Don't forget to smash the like button and subscribe. Go watch this video, and I'll see you in the next one.